What do you make of futures being in the red ahead of CPI today?
Look, I think the market's really focused right now on the economy, and the CPI number, has been pretty well discounted. So you could get a surprise there, and you probably want to get a surprise on the positive side. But if you get a negative number, i.e., the CPI is too high, then I think you'll see a lot more red in the market. But really, the focus is on how slow is this economy? What's the labor market doing? And really, where is the Fed going to message what they're going to do going forward?
By the way, your Wexler of the day today is messaging. That's what you're referring to right now. I also want to ask you, 25, 50 basis point cut. A lot of people believe that this CPI report is the final data point in the Fed's decision-making process. Where do you stand? Which one do you think that we need, and how do you see it impacting both the economy and the market?
So that goes back to my messaging, right? I think CPI is going to be important. And look, if you see a pretty benevolent number, the Fed could do 50. You could say, hey, we've got inflation under control. The message is we want to stay ahead of this. Just because when you look at what happened last time, they were a little behind the ball. So I think that's going to be really important. If the CPI number comes in as expected or a little higher, then I think you see 25, because they've got to take care of not just the economy, but also inflation.
I want to talk to you a little bit about seasonality. Of course, we're coming off the presidential debate last night. Bank of America came out with a note yesterday. I want to see if you agree with their thesis here. According to their research, their note, the S&P 500 has a negative average return in September and October. In a presidential election year, they say that financial staples and utilities, they have positive average returns of 1.4%, about 0.5%, and about 1/3% respectively. And they're the three best sectors, at least during this period. Basically, what they're pointing to are the historical precedents here. Do you agree with this idea that this is a year where we're going to see those historical precedents repeat, and those are the sectors to be in right now?
I mean, I like those sectors for fundamentals. I'm not a technician in the sense that this month you must do this or next quarter you must do that. We've had a great run, Frank. The market's up over 15%. You have to look at where valuation takes you. Fundamentals do matter in this economy, and financials, utilities, REITs, they actually are cheaper when you compare it to the market, and you actually have much more opportunity there. Do we get seasonality? Of course we do. I mean, you've got a lot of things going on in terms of uncertainty with the election, with the wars going on overseas, and an economy that we just don't know what speed it's at right now, and you just have to be careful. So I wouldn't be surprised that investors take money off the table. Interest rates are dropping, so you'll see some allocation from equities to fixed income, and you'll have people locking in interest rates as well, because as you've seen, the two years come down as well.
All right, so you're putting your money where your mouth is when it comes to REITs. Actually, your pick for us today is American Tower. That's a REIT focused on cell phone towers. Just looking at the chart, since Jackson Hole, shares are up double digits while the S&P is negative. Do you think that continues, that upside run with just a 25 basis point cut, or for this to continue to move higher, do we need that 50 basis point cut?
Well, I think if you get 50 basis points, the REITs, utilities will really do well. Even consumer staples, in that fact, will do well. I'm not betting on that. I'm betting on the fundamentals. American Tower is a great company, recurring revenue. They have, price fixed in their contract, so that as every contract rolls off, they get additional revenue. So these are companies you want to own in a what we call interest rate lowering environment. But if you get 50 more capital flows, because people would want the equity return as well as the dividend growth.
And you're talking about the dividend right there, about 2.5%. So you're saying right now with falling bond yields, it sounds like that's also attractive.
It is, because investors will say, hey, I want to, if I still want equity exposure and I also want to make sure I keep up with inflation.
Okay.
Why don't you own companies that have dividend growth? And American Tower is in that sweet spot.